Greetings, ladies and gentlemen. After a turbulent start to the year, it's time to dig into the world of banking and investing with a narrative that will have you on the edge of your seat. Are you ready? In the upcoming weeks and months, there is hope for Tesla stock as it has rallied from $108 to a more reasonable $177 per share. Although Wall Street is feeling upbeat, there's a catch. One valuation method indicates growing enthusiasm for let's find out what the future holds for Tesla stock, as specialists in the field are tired of the effects of rising interest rates. If you're a modest investor with just 2 shares of Tesla, I have some preliminary views to give. Investing in stocks may benefit you even more than you think. Let's see how much you can get started. Could early retirement be in your future? What are the chances that the value of Tesla stock will match everyone's predictions if you bet on those shares? Before we get started, please hit the like and subscribe buttons. Thanks to the market's recent strong reaction, Tesla investors are enjoying themselves greatly. Despite a small dip below 100 on the 4th trading day of the year, the price of Tesla stock has been steadily rising for the majority of January 2023. Ascending Tesla just released their Q4 results. Even if there were first reservations about the company's revenue, the financial results surpassed projections and sent stock skyrocketing. With a 52-week low price of 101.81 cents and a 52-week high of 384.29, Tesla is currently 55 below its previous surge after positive earnings results, and better than projected, the price of the US GDP test stock fell below 170 during the most recent trading day, as did most stocks. Tesla's stock is currently going over the 50-day moving average and is supported at about $167. However, the net price is below the 200-day moving average of $197, with the first level of resistance being at $179. Tesla's closing price was lower than the Nasdaq, which saw a 2% decline. Now let's proceed. In a recent interview, Cathie Wood said that the pre-share price of $3,000 per share represents the lowest end of her Tesla price range for funding Tesla's ultimate triumph has increased. Famous investor Cathie Wood is still very optimistic about one of her favorite companies, specifically pointing to an increase in their market share as the main cause, which she said had happened between the end of 2017 and the present despite the approaching arrival of electric vehicles from Ford, GM, and Toyota. Given that the stock is currently trading below expectations and would need to rise significantly to reach Wood's target, Tesla Wood's valuation of the company at $1 trillion may seem ludicrous. However, there is talk of a fully automated Reich vehicle network from Tesla, known as the Tesla Network, which will generate enormous profits for the business. In an email to Tesla employees, Musk brought up ARK's latest pricing projection and stated that he'd agreed with the research and that, with sufficient work, he could be able to agree with ARK as well. When Tesla stock hit an all-time high in 2021, Musk tweeted to his followers that he thought the price was too high. Board members and Tesla investors sued Musk, claiming that the CEO's irregular tweeting violated an agreement reached with the SEC. Musk also predicted that if the price of Tesla stock reached $1,000 per share, the company's total value would reach $3 trillion, making Tesla the most valuable business in the world. Currently, Tesla Motors has a market value of over $730 billion, making it the most valuable automaker globally. Musk often comments on Tesla's stock value. Through the 800-share sale worth of Tesla shares, or $5.76 million, despite the increase in the stock price, ARK Investments decreased its position in the company by less than 0.5% when the price of Tesla shares dropped in late 2022. As for the future of electric vehicles in China, Cathie Wood saw plenty of opportunity, according to StreetInsider.com. She had been buying a lot of them recently. A significant portion of ETFs focused on innovation still have Tesla as their largest investment ETFs. For example, Tesla accounts for 10.9% of the portfolio in the first flagship ARK Innovation ETF. Wood believes that the arrival of new electric vehicles from established automakers will serve to validate Tesla's approach. After 2 days of losses, investment banker Piper Sandler released an upbeat note, which caused Tesla shares to rise 3.1% as of February. For the first time, Tesla made money. This suggests that new investors in the electric vehicle maker stand to gain as much as 55% on their initial investment by the year's end in terms of profitability and capitalization. Additionally, Piper predicts increased profits for Tesla in the future, which could boost the stock price. According to Morgan Stanley analyst Adam Jonas, Piper Sandler showed some love for Tesla by raising its price objective of a stock to $750 and reiterating its buy rating. Present condition of the electric car, he applied the marathon comparison, saying that Tesla is at mile 21 and everyone else is either at mile 2 or is still tying their shoes. The market is a race and Tesla is leading. Jonas' recent record sales of Tesla's vehicles suggest that the company's position will strengthen as the race goes on. Jonas increased his price estimate for the stock from $400 to approximately $430 based on his prediction that the automaker would sell more cars in 2023 than it did in 2022. Analysts recognize the potential in Tesla's business as a result of supplier changes in software rewrites, which allowed Tesla to maintain production while also meeting rising demand. Due to Tesla's operational expertise during the pandemic, when other manufacturers were faced with chip shortages and supply chain bottlenecks, analysts were able to observe this. Tesla's current Fremont and Shanghai locations. These new facilities will complement those in California. With the addition of the new plants in Berlin and Austin, all of these changes will enable the corporation to boost earnings and production rates. Tesla will have more chances to raise its profit margins, allowing it to put those gains back into enhancing customer care. The UK and Norway are among the top markets for the company's cars, but it will take Tesla some time to get there due to network growth and expense. Elon Musk will undoubtedly be able to handle whatever difficulties the company may face in the future, and it will be interesting to see how they resolve these problems in spite of government incentives like tax breaks for other technologies. For example, the cost of a Tesla car is still often prohibitive. The starting cost of a Model S is about $80,000 before reviews or other reductions. The third model, most drivers are still unable to buy Tesla's entry-level choice, which still costs just more over $40,000 before any incentives, rebates, or gas savings. According to Gordon Johnson, an analyst at Vertical Group, Tesla lost almost $14,000 for every Model 3 car that was sold in 2018. Although these numbers will increase with more success, there is still a chance that Tesla's batteries may run out. This was a problem that the company's management noticed early on. The company's battery problem should be remedied in Nevada at Tesla's theme facility, known as the Gigafactory, which is presently under construction, has received approval by the state government of Nevada. Rivalry in the electric car market. Several large automakers, including Mercedes-Benz, have seen growth in the market. Within the next few years, Volkswagen, Subaru, and BMW want to release electric vehicles for consumer use. As a result, rivalry for Tesla's market share will intensify, and tech companies may join the fray. It's encouraging to see Tesla so far ahead of the competition. If you own Tesla stock now, you could be sitting on a substantial fortune in the future. Do you have a predictive value for Tesla stock? Feel free to share your thoughts in the space below. If you find this video helpful, be sure to hit the like and subscribe buttons. I'll see you on the next video. Apple and Google have also placed bets in the auto industry in an effort to compete with Tesla.